Hi, Richard.
Hello.
So I thought it'd be good for the community to have a brief discussion about crypto, CBDCs, and also give them a little bit of an introduction into what we're doing into Valkyrie with Valkyrie coin. But before we do that, there was one question which I didn't get round to in the sort of interview-based, AMA-based interview we just had, which I think would be really good to just quickly touch on, is what is stopping an EU bank or a foreign bank creating domestic currency? So a European bank creating dollar loans or giving out dollar loans, creating dollar credit with euro dollar deposits.
Well, hang on. You're saying with dollar deposits, but of course, banks don't need deposits to create money. So it's more the question, why don't European banks create dollars, right?
Yeah.
By creating these deposits. It's the rules of international banking that banks that plug into the international banking system create credit only in their own currency of denomination, in their domicile, and that essentially all pounds sterling are held by British banks, all euros are held by Eurozone banks, and all dollars are held by US banks. That's the rule. Of course, say European banks will have dollar accounts that they offer their customers, but that's the shop window, you know, it says Deutsche Bank US dollar account. But behind the scenes, that's actually an entry that Deutsche Bank has with a US registered bank. Whether it is Deutsche Bank USA or JP Morgan or something, doesn't matter, but it's a US bank. That's where the dollars are held. And that's how the system works. And that's really the answer to the question. Okay. You know, it is US banks that create dollars and Eurozone banks that create euros.
Okay. And they just can't because they don't have the functionality, or
well,
it's just a rule?
You could, one individual bank could create, you know, any currency, but it can't plug them into the system.
Right.
For that, you need to play the rules of the international system. And so then that's where the problem occurs.
Okay.
So you could say suddenly, you know, any economy, we've got dollarized economies, they could suddenly say, well, we're gonna do everything in dollars. But the moment you try to plug into the international system, then you have to play by the rules. And in those cases, it would then have to be a currency board where every, you know, where essentially, you know, things are backed fully on a one-to-one basis. And when they're dollarized, then it's a case of essentially extending. I mean, it's a complete, full, proper dollarization. Then you're extending the dollar zone to that country, which normally also requires and affords the collaboration of the Federal Reserve. There are some small cases where there's a dollarized, or let's say, a foreign currency, doesn't have to be the dollar, is used in a country as the only currency, and that's not been done with the cooperation of the central bank of that denomination. An example is Montenegro, which used very early on the Deutsche Mark. And then once the Deutsche Mark disappeared in Germany, actually they kept using the Deutsche Mark for a while. And they never had the active cooperation or support from the Bundesbank. But essentially they're using Deutsche Mark notes. And then the banking system was also creating Deutsche Mark, but is limited by the fact that if there are a lot of transfers abroad, so to speak, then the limit is the amount of reserves they have in, and so, you know, there are limits to that. But that's, and now Montenegro is using the euro, again, without the active support of the ECB. So there's some exceptions, but they have also their limitations, and actually surprisingly few such exceptions.
Okay, great. Okay, so moving on to the main topic of conversation on CBDCs, something that I know you're a big fan of, and you really want to push them forward and promote them. CBDCs, what do you think of them in a nutshell then?
Do you mean central bank retail accounts for the public? And you've chosen to use some fancy name for that.
Yes, I've used them. I've used the name they've used as a PR stunt.
I see, I see. So central banks are going to offer retail accounts to the general public and business accounts right straight there at the central bank. And they happen to call this something like CBDC. Well, in that case, what we're witnessing is that the central banks are preparing as bank regulators to compete against the regulated. Now, is that fair competition? I wonder how the competition authorities look at that. If the regulator of an industry suddenly decides, oh, we're going to step into the arena, and we ourselves, as the powerful regulator who can boss around anyone in the industry and tell them what to do, we're now going to compete with them. Obviously, that's not competition on the level playing field, so much is for sure. It certainly would explain the past decades of anti-bank policies taken by a lot of the central banks, such as the ECB, because if your goal was anyway to wipe out the banking system by competing against them, then yeah, you'd soften them up by having really disastrous interest rate policies that kill off bank profits and imposing vast costs through totally exaggerated, unnecessary regulatory burdens. And then you move in for the kill by launching central bank digital currencies, well, what you call that, which are actually just retail accounts at the central bank. And then you could also trigger a little crisis, a little banking crisis, and then you'd be sure that all the depositors would move their money from the banking system to the central bank. And that's, you know, then just switch off the light in the banking system.
And then they have full control and full power. Absolute power corrupts.
Well,
absolutely.
Soviet Union, you know, the Sovietization of the banking system, just the one central bank would then survive, and all the other banks would disappear, like in the Soviet Union in those days when it was a monobank system.
But surely, why would a central bank want this? Because they've already got pretty much full power. And surely by making it a one bank system, they're just putting more work on themselves, because still all the groundwork needs to be done by someone. And if it's not done by the individual banks in certain areas, it has to be done by the central bank, surely.
Well, you certainly wouldn't do it if your goal was to create sustainable, high economic growth that is without inflation, without crisis, and equitable. Because for that, you want to have as many banks and as small banking sector, you know, and small banks consisting of as many small banks as possible. But that's clearly not the goal. So we have to conclude the goal is to end economic growth, because that will be consistent if you don't want any more economic growth. And that would explain why central banks are also now suddenly saying, oh, we're suddenly very concerned about the environment, and we think economic growth is the problem. Which of course is nonsense. Economic growth is not the problem, and it's not economic growth that hurts the environment. It is environmental destruction that hurts the environment. It is pollution that hurts the environment. And you can have as much pollution as you want with zero economic growth, you know. So it's complete nonsense conflating the issues, but that's what's being sold to the public.
See, so then SMEs and people and businesses alike will all rely on capital markets for our funding. And as you won't get any economic growth, but is that what will happen?
Well, essentially, you won't get economic growth, and you'll see therefore a lot of companies going bankrupt, which fits into the 2020 COVID policies, which were also of a similar ilk. So no more growth means that there will be a massive further concentration of power in the hands of ever smaller numbers of people and players that are ever bigger.
Okay. Just to play the other side of a coin then, it doesn't seem very, let's say, realistic that a central bank would ever do this, because all loans to businesses would effectively stop as soon as they do this. And it would just have such an obvious negative impact that they could never hold their hands up and say it wasn't our fault, it was the bank's fault. We have no responsibility here.
Well, I doubt that. I think it's possible to arrange a scenario where they can say, oh, this is just happening now, and so, you know, it's not our fault. I mean, already the ECB is arguing we have to introduce central bank digital currency because there's demand out there. You know, the Bitcoin and all that is evidence. We have to act, which is nonsense. They don't have to respond to that at all. And they certainly don't have to intervene to create retail accounts for the general public at the central bank, thereby ripping up the centuries-old concordat between, you know, division of power between the central bank and the banking system, and making this very aggressive anti-bank movement. But it fits with the other anti-bank policies that central banks have been taking for many years, particularly in the Eurozone and some other places.
Of course. So moving on to cryptos then, and Bitcoin especially, do you think that perhaps it was a tool used by central banks in order to gain some sort of momentum in the crypto space so then they could push this central bank digital currency forward?
Well, it looks like that, doesn't it? And it wouldn't be surprising, because what did surprise me is how early on Bitcoin was promoted by establishment publications such as the Financial Times and Bloomberg, that created, you know, prominent space for them when, you know, fairly early on, when it was clearly not needed and was not really warranted by the economic footprint of Bitcoin at that time.
Yeah, that makes sense. Okay, so then I guess moving on to your own sort of project, or our own project about DeFi solution, would you sort of be able to explain a little bit more about sort of how you're trying to combat the ever centralizing banking system?
Yes, exactly. So I think, given what we've said and what we are witnessing in the world, this very forceful further concentration of power in the hands of those controlling very concentrated banking systems, I think we should do the opposite, and we should create many small local banks and community banks, and we should use various tools to do that. And that can also include ways to help the public participate in this, for which we can also use tokens and cryptocurrencies. And that's certainly a project that we're very closely looking at.
Great, great. And obviously the white paper is currently being written, and we'll be able to share that with everyone soon as well, where they'll be able to see how the community aspect really is ingrained with the banking system that we're trying to set up ourselves, to have a real decentralized banking system run by a decentralized autonomous organization, where the community themselves are putting proposals forward and helping us build this sort of network of community banks across the world.
Precisely.